Welcome to this episode of PhillipCapital's Market Watch. I'm Yi Jie, FX Business Development Manager from Phillip Nova. Today, I'll be sharing why you should start paying attention to a particular currency pair, its key drivers, and how you can use the Forex market to capitalize on potential upside opportunities. Against the backdrop of increased volatility among key asset classes, rise in geopolitical uncertainty, and ever-changing stances on interest rates, one currency pair comes to mind, and that is the Australian dollar against the US dollar pair. The Aussie dollar currency pair represents the value of Australian dollar relative to the US dollar and is one of the most actively traded pairs in the Forex market. The pair is significantly influenced by economic indicators from both the Australia and the US, including interest rate decisions, GDP growth, employment data, and trade balances. The Australian economy's reliance on natural resources and commodity exports, especially iron ore, coal, and gold, makes the Aussie dollar currency pair sensitive to commodity price fluctuations and demand from major trading partners like China. Additionally, the interest rate differential between the Reserve Bank of Australia and the Federal Reserve can impact the exchange rate, with higher interest rate in Australia typically strengthening the Aussie dollar. The pair is also influenced by risk sentiment, appreciating during times of global economic optimism and depreciating during periods of economic uncertainty. Trade relations between Australia and major partners, particularly the US and China, play a crucial role, and any changes in trade policies, tariffs, or geopolitical tensions can affect the Aussie dollar pair. In the Forex market, there are several classifications of currency pairs. The Aussie dollar pair is identified as a major pair, which is characterized by being actively traded and highly liquid. Actively traded currency pairs often see closer bids and offers being placed, resulting in tighter spreads, which translates to lower cost of transaction. Having good liquidity increases the chances of entering and exiting a trade at the desired level, reducing price slippages, giving an overall enhanced trading experience. As an asset class, Forex is traded on margin, which means trade can be established from as little as $50 US. You can go both long and short on a currency pair, which allows traders to capitalize on all market conditions. Lastly, the Forex market is volatile, although this can be a double-edged sword. Having frequent price movements will allow for more trade opportunities to occur. Now, let's dive into the daily chart for a technical outlook of the Aussie dollar. After peaking around 0.8 in February 2021, the Aussie dollar has been on a massive downtrend to a currently hovering around the 0.6650 region. Aussie dollar started this year at 0.68, where sellers dominated the markets and eventually bottomed at 0.6360 on 19 April. After which, the pair posted a strong rebound to test the resistance zone of 0.67. Throughout May and June, the Aussie dollar consolidates in a narrowing range, forming a symmetrical triangle, which is typically a continuation pattern. However, as there isn't a strong bullish trend preceding the pattern, there isn't a clear directional bias. Despite the lack of clear direction at this point of recording, traders can await confirmation by a breakout in either direction. An upside breakout from the triangle would provide opportunities for traders to trade an uptrend towards the price target of 0.687, while a downside breakout would send the pair testing support at around 0.6440. Earlier, we alluded to how economic data is one of the key drivers of price, so here's a list of high-impact events happening in the month of July to look out for. Starting the month with a series of Purchasing Managers Index, or PMIs for short, from China and the US that serves as a prevailing indicator of economic trends. The FOMC minute revealed the stance of Federal Reserve on interest rates. Following closely after is the Consumer Price Index data that measures inflation, and closing off the month with employment data, which measures the strength of the labor market. Typically, a larger reaction from market participants is observed when data falls outside of the expected range. With that, I hope you now know more about the Aussie dollar pair, why it is worth adding to your personal watch list, and the upcoming opportunities. That is all for this episode of PhillipCapital's Market Watch. Do remember to like, and follow us on our social media handles and subscribe to us on YouTube. Thanks for joining us and see you soon.